Tom, it's really a tale of two producers. You've got the super majors, the big guys, and they've managed to get some significant scale that's driven a lot of efficiencies and driven down cost. And then you have the smaller guys who really have to have oil above
Yeah.
65 dollars a barrel to make significant money. So there's a difference between the two producers, and it's tempered. We're seeing some really depressed oil prices recently, and it's not a great mood here in Houston.
So, Angie, is there an oil glut in the global oil market space? And if so, how long might that last?
Yeah, we certainly are seeing some oversupply in the market. We're seeing the U.S. inventories building. We think China, we don't have great data, but we think China's building their inventories. OPEC has agreed to curb production after the first of the year, and which is a good indication that they also see some supply glut coming. So we're in a bit of an oversupply right now with some uncertain demand in the future.
So, for our friends down in the Texas area, the Oklahoma, all that kind of, what are they doing with production these days? Because, the cost of production, we got to be at or close to it right now for a lot of those folks.
Yeah, it's interesting. The Dallas Federal Reserve does a quarterly interview with producers, and 75% of those respondents to their survey in September said that they were either significantly curbing or slightly curbing their activity. So people are really looking and trying to see what the long-term dynamics are going to be, and it's really going to, define their plans going forward.
So you're having a cup of coffee. I mean, KPMG in the Oval Office, I can see it.
Yeah.
You're having a cup of coffee, Angie, with the President of the United States, and he's gung-ho old school petroleum. You're telling me gung-ho Houston, good morning, Houston, good morning, Dallas, they're not so on the same page as the president. How far apart is Texas from the president of the United States on oil?
Well, I think on one hand, as Americans, we all appreciate having affordable gas prices. There's the difference between what the short-term markets do and the medium to long-term markets do. And I think what energy company executives want is just certainty from a policy perspective so that they can plan out their capital expenditures and their budgets accordingly. So as long as we have some certainty from a policy perspective, I think it makes it a lot easier to run your business.
Where are we, I guess, on this energy transition? It seems to be, I'm just reading a note by Ian Bremmer of Eurasia Group right now. It just hit my inbox, and he's saying the rest of the world's moving towards, cleaner energy, kind of continuing this energy transition, if you will. The U.S. and the Gulf regions, not so much. What are you hearing from your clients?
Well, we've certainly seen some changes in policy here in the U.S. around incentives on alternative energy, but we're still progressing with solar. Solar is a relatively low from a cost perspective, and so we're still seeing progression there. We're seeing progression. Companies are still investing. Energy companies are still investing in things like carbon capture, to some extent, hydrogen. China last year added more renewable capacity than the rest of the world combined. And they're at a point right now where, one in every two of their cars are electric. So they're certainly progressing. So I think we'll continue to see disruption happening, but it'll be chaotic, and it'll happen in different speeds in different regions of the world.